This is Saturday, September 27th, 2025. Current time 6:44 a.m. I'm just going to do a recap on the cues from yesterday and why it did what it did. On the 5-minute chart, the statistical mean is this cyan blue level here. That was ultimately gravitational point. In previous times, it tagged it exactly and then rejected. So if it wants to continue off this trend, which is possible or not possible, either one, then it got up to it, then it may reject again. But it's not interacting with it the same way it did on this day here. It's slightly different. Rhymes, but it ain't the same. The math I had out for Friday on Thursday was 592 possible support level, and 596 was your gravitational point, your median level. The way I view it on days like yesterday is if it's below here and gets up to the median level and rejects twice, kind of like it did, then if there's other economic indicators showing that it may be more of a bearish day, then it will reject. And vice versa, if it happens to get above this, then this makes support here, then you're more likely going to have a more bullish day. Of course, nothing is 100%, but that's just something I've seen in the past. Right now, it's trading above it. I'll have to do the math again. I'll probably wait till Sunday to do that. But anyway, if hindsight's always 20/20. But at 9:30 yesterday, it did show up as being more of a bullish possible move, or 9:31. I'm sorry, at 9:32. 9:32 it showed up as being more of a bullish move, but also depending if you had just hit like market order or whatever, then you may have gotten in at 595.26. The most you could have got was 596, or at least that's what algorithms would be looking for. So that one is a little bit more sketchy or whatever, trying to get in and get out. And the way that my thought process goes is you have less likelihood of being correct up here. If it had been more optimal, the bottom of average daily range would have been a good one to catch yesterday morning. It never did tag my level when I was looking at it at 5 o'clock yesterday morning, though, 592. But the way that my logic would have been yesterday if I took a trade would have been to not even think about going long until more so down here whenever it's below my level, and then you get more confirmations up here, and then once you actually get a good green candle, that's when you can go long again. But my goal would have been 596 since it rejected from it at one time there, and you would be hoping that it would continue up here for this first move, but it didn't. It rejected, so you'd have to close your long position there. You could try re-entering it again, but the more and more you try to re-enter, the more sideways markets may be. And between fees and slippage, you're less likely to have a massive gain on a day like yesterday, unless you can hold it all the way through and have your stop loss just below this. But that's definitely one of those that would have happened babysat, and yes, it did reach back up to 596 and hung around there for the duration of the day, which algorithms don't see that as, or at least in my opinion, algorithms don't see that as being buy or sell zone. It's just they can read it way faster than I can, and so many days it's just sideways. And this is for Costco. Usually I do a 30-day, 30-minute chart to get some sort of gauge on what a company like Costco may do before earnings, and sometimes it's accurate, sometimes it isn't. Sometimes it's really good, and sometimes it's not. Here lately, though, sometimes what I do is I prefer to mark off the 161.8% level, just because that's a much higher level than where it's currently trading at, and it does hit sometimes. I know Tesla likes to hit that sometimes, whether it's the top or bottom. So on Costco, in my personal opinion, and it, opinions are like buttholes. Everybody has one. They all stink. 1,048.13 could be an algorithmic goal, and then a possible selling point. 862.62 may be a buy point. Again, I don't know nothing about Costco or nothing, or I know they do fairly well. That's all I know as a retailer. Gravitational point right now is 953.25. Yeah, but definitely yesterday for earnings, it didn't look like it's overall positive. It was quite a slip, but it traced back to at least half the move. You can do the Fibonacci scale on that one. I'll give or take. It retraced half the move, which is super duper common. But that was before earnings and what it did yesterday, so we'll see. This is another example here of why sometimes I would prefer to do the 161.8% level versus just 100% level and 0% level. For Carnival Cruise Lines, it shows up as being 28.58 to 33.50. So that isn't a huge move in either direction. I know overall it is it's not a small move. But that's one of the reasons why I like to do 161.8% levels, is because the move can possibly be 36.55 to 25.54. That's $11 move, full move. So that's way more substantial. Gravitational point right now is $31. So Monday, whenever they do their earnings, algorithms anyway will view this level here and this level here as being more of a sell area, more of a buy area, unless if just earnings come in completely flat and whatever, as expected or whatever, then these will be more apt to be correct. But if they're knocking it out of the park, then it may try to gravitate towards up here. As far as trying to determine what will happen in the future, it's definitely hit or miss, but it's algorithms definitely see these levels here as being possible rejection or support levels. Just because on a statistical basis, it's more of a buy opportunity, more of a sell opportunity. That's the best way of putting it. I thought I'd go over Nike as well. Sometimes it's very, very volatile. Their earnings is on Tuesday. What shows up as being an extreme, more on the extreme level, is 53.83 and then 94.14. So that is massive potential move in either direction. Very, very massive for a big company. Again, the gravitational point is $74, so it's almost at that now. So, well, okay. Yeah, that's all I got. Hope you're happy, healthy, well, goodbye.